The first step towards achieving your dreams is having the right coach. Get the best education with Hybrid Trader and make your options, strategies, and swing trading dreams come true. Download the app now.
Hi friends, I'm back with one more video. So today we will be discussing about my calendar spreads. Basically, I've just deployed this as a budget strategy. Okay, just to show you whether this is my real trade or not. Check the strikes. Okay, so almost at 3:15 I've deployed this trade, guys. Almost at 3:15 today. Where is the time? Yeah, maybe at 3:15 I might have deployed this trade, and this is my sort of budget strategy, or else I could say this is the calendar spreads wherein I want to take the advantage of the rising VIX or the rising IV. That's it. Okay, let me show you. Okay, so this is my basically this is my calendar. Okay, just I'll make it very simple, guys, because I've already made so many videos in the calendar. I'll not talk about all the basic things. So what I've done is like, this is for the 12th Jan. Okay, 12th Jan is my expiry, so I bought two sold positions, and 25th Jan I'm just edging with 25th Jan expiry, because I'm not sure when is the budget. I think that could be like first week of February or first or 31st. Ideally maybe first week of February. So this trade, basically whatever I've deployed is not at all a strategy. Believe me, guys, when someone says that calendar spreads is a strategy, don't believe them, honestly. Basically what we should expect from calendar is the rising VIX, or else the implied volatility, the rise in the IV. That's it. So I've deployed this calendar spread. If you look at the shape of the calendar spread, right, this entire area is the loss area, right? In the middle I have this loss area. Okay, and then my maximum loss starts from here, my maximum loss starts from here. That's it. Okay, now, but there is a small catch in this area. Basically what did I say? I've deployed this trade as not a strategy. I want to take the advantage of the implied volatility, the rising implied volatility or the rising VIX. We know, right, whenever we have the budget, looking at the past history, right, whenever there is a budget there is a fear in the market, right? I'm not sure like what exactly we will be getting, but the IV tends to shoot up, not exactly at the close, maybe on the day of the budget, maybe like 2 weeks 3 weeks before. I think I'm just deploying this trade today. I think it's too early, but we know, right, the VIX is low. Okay, let me again show you the calendar. The reason why I'm deploying this is like the VIX is low. Basically the VIX is already at 15. Okay, so my expectation is, or maybe my view is like VIX might shoot up. That's it. I mean, I do not have any other strategy. VIX might shoot up. So whenever the VIX goes up, the IVs will also shoot up. Okay, that's the only strategy. Now, let me explain you the entire trade logic. Okay, if you look at this thing, right, I've taken 17,400. One second, guys. See, I've taken the strike 17,400 and 18,700 for 12th Jan. Okay, check at the premium, right? I bought I at 30 rupees and almost like 35 rupees, right? You'll get to know. Keep a check on this range. I have almost like 5% range on the downside, and I have almost like 4.5 range on the upside, because this I've deployed for 12th Jan and the edges I've done for 25th Jan. You know, right, whenever the VIX goes up or the IV shoots up, right, I'm only concerned about these two legs, because this will give me that profit, not this two. Okay, this strategy I'll show you. If VIX goes up, you'll get into good profit. If VIX comes down, you will end up into loss, right? Definitely does, but the probability is 80 to 90% of the time. Looking at the past history, whenever we have the budget, right, the IVs or the VIX tend to shoot up. All right, based on this 80 to 90 percentage probability, I'm deploying this calendar. I might be wrong. I'll show you all the example. If the VIX falls, what will happen? Okay, now the second thing is like, we all know, right, whenever the market falls, there is a tendency that VIX will shoot up, right? We all know that, maybe 80 to 90% of the time. That's where I'm deploying this trade. So what happens is like, whenever the market falls, we all know these are the two buy positions, so this will shoot up like anything. Okay, though this premiums will also shoot up, but this premiums will shoot up like 2 to 3x times more than the sold strikes, right? We have discussed this many a times. Okay, let me again come back to this strategy. So what happens is like, if you look at the blue line, The blue line, see, my loss starts from here. Right? Check the blue line. The blue line is steep downwards and the blue line is steep upward till this point. So my loss will start from here. Okay, but are you confused or what? Why the blue line is steep up on the call side? Why it is downside? Intentionally I've deployed this trade, guys. Intentionally I've deployed, right? I want market to fall. I want market to fall, not with a great momentum, not like 3%, 4%, right? I want market literally to slowly come down, because falling market will increase the VIX. This increasing VIX will increase the put this premiums like double or triple rather than decaying, rather than increase in this position that we have discussed. Now let me show you why am I okay even if this blue line is steep downward, right? Okay, let me show you now what I'll do. Okay, let me show you, right? What if the VIX increase by 2 points? Okay, what if, okay, let me first show you, right? Let's say the market makes a downside movement of, let's say 2%, guys, 2%, right? 2%. Check the blue. So 2%, my loss is around 4,500. All right. Two, when the market falls by 2%, my loss, it is showing 4,300 or 4,500. Now, whenever the market falls by 2%, don't you think the VIX will shoot up, or the IVs will, even if the two, I'll just make it like 3 points or 4 points. Let's take 4 points, like, or let's take 3 points, right? 3 points. Now check the 2%, right? The market fell by 2%. Initially it was showing 4,000 loss, but ideally I'll be getting to 3,300 profit. You got my point? See, this is the probability, guys. This is the probability. What I meant to say, whenever the market falls, the VIX tends to go up. That's it. I'm not increasing VIX drastically by 5%, 5 or 10, right? Or let me show two points. Let's say that 2 points the VIX has increased. Okay, 2% downside move, right? Still you are in profit of how much? Almost like 600. You're not in loss. Technically you're not in loss. Okay, let me reset this. Yes, 2% downside move. If you over the mouse, you will be concerned. My bad, if market falls by 2%, I'll be like incurring a loss of 4,300. But technically you will be not in loss, because VIX has to go up. The IVs will shoot up. I've just shoot, even if it goes by 4 points, check this, like 2% of downfall movement is giving you 5,870 profit on a capital of how much? 2,43,000. So this is all about getting the advantage of rising VIX. Got it, guys? Okay, let me reset this. Now, what if the market goes up? I mean, that's a deadly combination. We have discussed so many times, right? What if the market goes up? The market goes up, the VIX tends to fall down. So this is not a good combination for calendar, because this falling VIX will decrease, right? The premiums, that premiums decay will happen between the buy position, because we are a option buyer in the calendar spreads. How to say that option buyer? Check the Greeks. Check the Greeks, guys, here. 2,558. What this is pure Vega positive. So what are we expecting? If my Vega, the overall total Vega is showing positive, so I want VIX to go up. That's it. There is no other strategy call. I want VIX to go up. If it falls, then this trade will show me loss in almost all the angles. Should I show you? Right? Let's say the VIX fell by 4%. VIX fell by 4, or IV, sorry, not VIX, IV went down by 4%. See, check the loss. I will be incurring the loss of 9,000. The T plus 0, and on the expiry 15,000. On the contra, if the IV, let me show you like 0. Let me reset first. My loss is only how much? Okay, did I manipulate the market? No, right? Yeah. My loss is how much here? My loss is almost like see, ideally I'm in profit, 240 rupees profit. So let's say if the VIX shoots up, my loss on the expiry in the middle would be like next day would be almost like 5,000. On the expiry it would be 10,000, right? If it increased by 1, see, my loss will reduce 3,000, 8,000. If it increased by 1 more, see the red line is disappearing. The middle part is becoming profit, right? 1,000 and 6,000. One more. Right, now check this. I'm getting into profit, and one more. Okay, now my entire trade has become almost cost to cost. But check the profit, guys. Check the profit. Your profit is 38,000. So it has increased check the range. We initially started with how much? 4.9. So this has increased to 5.2. 5.2. It was 4.3, 5.2. So what happens whenever the VIX increase, your trade would change in terms of your maximum profit will increase, your range will increase, but your loss will remain. Don't go on this loss. This loss will be only extreme cases. Even if the market, okay, let me reset this. Let me reset. Let's say the market fell by 5%, right? Let's say tomorrow you have a gap up of 5%. Check the loss. The loss it is showing is almost like 14,256. Boss, tell me one thing. If the market has given a gap down of 5%, or else during the market hours, if the market is going down and it gave a 5% gap down, don't you think the VIX will increase? Right? Check this. 5% gap down is giving you 14,500 loss, but technically don't you think the VIX will increase, guys? Right? Forget about 4. Let me make it 5. So technically, even if the IV shoots up by 5 points, right, the 5%, see, check this, the 5% stop loss is giving you only a loss of 4,700, that to T plus 0, but on the expiry you'll be getting still with 12,000 profit. So just try to understand. Don't buttify the strategy, right? The considering the VIX. I have just deployed this trade. Now, what is the stop loss? I'll not do any adjustments because this is not at all a strategy. This I've just deployed to get the rising VIX advantage. What is my stop loss? 2.5 lakhs is my capital. So even if I take like 2% or 3%, so the moment I see 5,000 loss on the downside or on the upside somewhere, I'll try to do the adjustments. Until and unless, I'll not try to do any adjustments, because I know 80 to 90% of the time, close to the budget, right, the IV tends to shoot up. If it comes down, I've shown you. If it goes up, I've shown you, right? See, check, this is the original 4.9, 4.3. Don't you think this is a huge range for additional for another like 2 to 3 weeks, right? I thought of deploying this one. Ideally, I thought of deploying this thing, right? See, when I want to take the advantage of rising VIX, why do I need the call side, what do we say, the call side calendars, right? Can't I go for this thing? Yes, I should have gone for this thing, but you know, right, the market is volatile. Actually, it is going up, it is coming down. So what I'll do is, like, let me show you, right? This is showing me a loss. See, my intention was market will come down or maybe the VIX will shoot up, but what happened today? I'll deselect this thing and then I'll show you the call calendar. See, even I can go for this thing also, but this is giving me the profit. Okay, that's the reason I'm just combining. So tomorrow what happens? If the market keeps falling down, slowly falling down, right? You know, right? When the market falls, the VIX will tend to increase. The VIX will tend to increase. As and when the IV shoots up, what will happen? My trade will become green. See, I'll be getting like almost like with 5 points up, right? I'll be getting how much? On the expiry, I'll be getting 6,500 on a capital of 2,43,000. The next day, I'll be getting 13,000. Yes, I know the what all the profit and loss which is sensible or Lobster shows is based on this algorithm, but still I'm giving the tentative figures, right? So what I was supposed to discuss now, check this range 5.7, 5.4. From 4.9 the range has increased to 1. Check this profit. Initially your profit was how much, guys? Let me reset. Your profit was only 23,000, but with 5 point, even 1 point, right, the profit will increase 10%. Even with 1 point, your profit has increased from 10 to 12%. Even with 1 point, right, your profit has increased to 13%. So this is the way we have to take the advantage of the rising VIX. Got it? This is my budget strategy. My stop loss would be 5,000 to 7,500 because I am just going based on the probability. 80 to 90% of the time the VIX, the IVs will shoot up for the budget, and now on moreover the IV is low. Since from last 1 month the IVs are low, so I'm expecting the IVs to shoot up. Right, so why I've selected 12th Jan, right? Basically 25th is the calendar edges I'm deploying, right? So 5th would be like too short. See, I could have gone for 5th. See, I could have gone for 5th and 12th as the calendar edge, maybe weekly once, and then if it is a profit or loss, and then I would have gone for 12th and what is the other week after 12th we have, let me show you, this is December, right? Yeah, Jan. Let me take you to Jan. right? So 12th and 19th, and then I would have gone for 19th and 26th. I could have done this, but what I've done is like, maybe for now I've just deployed it only for 12th and 25th. Yes, if you want, you can go for 5th and you edge with 12th. Then after 1 week, you go for 12th and edge with what, 18th or 19th, and then go for 19th and edge with 25th. It's up to you, right? But the takeaway from this video is, guys, I should see, check the 17,400 and 17,300. I could have gone for 17,400 also, making it a classic calendar. But when I was doing that, I was getting more safety. Let me show you, right? When I went to 17,400, I was getting more safety on the put side, because I need safety on the call side, basically, because I know market falling will make this blue line steep, right? The range will increase. So I have to just think about this combination, market going up, that's where the VIX will fall down. If the VIX falls, right, this will give me the loss. So now what I'll be doing is like, let's say the market keeps falling. Let's say the market keeps falling. Let me show you one. So there are like many adjustments, guys. I mean, if I talk about the adjustments, this will take, let's say there is VIX keeps increasing, IV went by 3, and let's say the market stands here. Let's say, right, IV shoot up, let's say your market stands by 2%. Now you are already in profit. You are already in profit. Do I need this combo? Do I still need this combo? So what I'll be doing is, I'll exit this combo. I'll exit this combo and I will shift. I'll roll down. See, while roll down, when I want to roll down, do you think I'll be taking the next week calendar edge? Because point number one, if I want to take the next week calendar edge, that would be expensive. So maybe I'll roll down, but not as a calendar. The sell and the buy position would be for 12th January. Because what I meant to say is like, even let's say I've shifted this entire combo, I've exited this, right, and I've shifted. So maybe something, I made something like this. Okay, let me show you, right? Let me show I made something like this, right? I've shifted, I've exited. Now market stands here. What if the market takes a U-turn? Market taking U-turn is like market going up, VIX will fall. So if I take the calendar edge, right, this is not a good combination. So for that, what I'll do, I'll shift, but basically with this same calendar. So I'll go for 12th sell position. I'll go for 12th sell. I'll exit this. I'll exit this, and then I'll roll down this by 300-400 points for the same 12th Jan, and also the calendar edge I'll be taking for the 12th Jan, not for the 25th Jan, because I don't want to get into that situation wherein the market takes a U-turn and the VIX keeps falling, and this will decay my calendar edges very quickly. Alright, guys, I think you got this thing right. So let me again show you the Greeks, boss. This is very important. This is Vega positive, so I want trade to go up. Yes, I could have deployed this for 5th and edge with 12th, but what I've done is like, I've just deployed this for 12th and 25th. I'll see, like maybe tomorrow if I get with some good profit, or maybe if I get with some stop loss, I'll just exit this entire trade and I'll try to do it for 12th Jan and 20. The reason why I went for 25th Jan is like, I'll not get any liquidity issues. Maybe 19th Jan I would still end up into some liquidity issues, but 25th Jan being the monthly expiry date, I'll not get into some liquidity issues, right? Now you check the strikes, like 17,400 and 17,300, right? Though this is not a classic calendar, but I am making, right, I'm selecting the strike 17,300. I'm making my calendar edge very strong. So let's say, I'll tell you example, my buy position is this thing and my sold position is here. So let's say if I have a spread difference of 300 points, let's say market stands here. When the market comes down, this sell position will become in the money, right? This is my buy position. So now whenever the market is coming down, this sell position will become in the money, so I'll get huge loss, and my buy position is 300 points away, right? So this is still OTM. The delta is low, but this will start giving me huge panic because my buy is almost like 300 points away. That's the reason I made 17. I took the strike of 17,300. So I bought my buy here. just a 100-point difference, not 300. Now even though this becomes in the money myself, my buy position is so close to my sold position, even this will shoot up, the premiums will shoot up slowly. But this being the calendar, that the delta is very high, being a calendar, this will shoot up double than my sold position. That's a reason I bought my strike position very close to my sell position. I could have made it 17,400 also, meaning, right, even though this has become in the money, even I have one buy position here. So even the sell position premiums will increase obviously, but the buy position premiums will increase double or triple, because this is the calendar edge. We all know, right, whenever the VIX increase, right, the calendar edges premiums will spike double than the existing, the current week. That's the reason I bought 17,300. I made it very close to my sold position. But why not? Why didn't I bought this one, right? 16,700, right? What is this? 18,007. What is this? 18,700 and 18,800, right? Because this is a deadly combination. Anyways, the market going up, the VIX will fall. So why should I get this to 18,700? I could have see, ideally I should have went for 12th, what is it, the next week, 19th Jan, or the current week edge also, but the payoff will change entirely, right? You will get confused basically. So that's a reason, right? What I try to say, I am very concerned about these two strikes. I want these two strikes to be very close, because I don't want to get into that situation where my sell position is in the money, my buy position stands 300 400 points away, wherein the premiums will shoot up like anything, and by the time the market comes to my buy position, my entire trade will be in loss, and then this will start giving me the profit. So that's a reason I maintain either a classic calendar or not more than 100 or 200 spread between my sold and the buy position. Got it, guys? I think, guys, if you want more knowledge on the calendars, please go back to my YouTube channel, go to the playlist, search for the calendar splits. You will find the entire ABCD and XYZ of calendar. But still, if you want to join my paid mentorship program, guys, you will find the description, and in the description box you'll find the link, right? Go and check the link. You will get to know about my paid mentorship program. This is only 2 to 3% what we are discussing, but the remaining things is you will be discussing into my paid mentorship program. Alright, guys, if you like the video, please like my video, right? If you want to subscribe, you can subscribe, and also if you want to share with your friends, you can share with your friends, guys. Alright, thank you.
The first step towards achieving your dreams is having the right coach. Get the best education with Hybrid Trader and make your options, strategies, and swing trading dreams come true. Download the app now.